Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thank you for coming on today.
Happy to be here.
Well, it's now almost a month since Russia started its invasion of Ukraine, and of course that's caused a surge in the prices of some key raw materials, and it looks like that's going to weigh on economic growth around the world this year. It's hit the prices of resources like natural gas, nickel, and aluminum, and is even threatening to disrupt food supplies. What's the situation now with the war so far showing little sign of an end?
Okay, well, it's interesting that you mentioned natural gas, nickel, and aluminum. These are obvious. The prices of these are obviously going up, but also they've been going up even more than expected because not only is Russia their major supplier of these items, but they also have some special circumstances which have increased the prices even more. For example, natural gas. The gas from Russia is routed through the Ukraine. So because the battles taking place in Ukraine, the gas is not likely to get through, at least not normally. And then aluminum. Aluminum is energy intensive. Requires an energy intensive production process, and because of the rising price of energy, that is also accounting for higher prices. Russia is a major producer of aluminum, and it's also caught with the higher energy prices. So that's why the prices are going up even more than other metals. Metals which are not produced in Russia, it's not being affected as much. The copper price is falling right now, and the major copper producer is Chile. So it's these metals which are coming from Russia, which is the big problem. But even though it's only these metals from Russia which are the problem, I cannot wonder if the speculation is not playing some part of this. The United States just started raising interest rates. Other major central banks have not yet increased interest rates. So there still is a lot of liquidity, a lot of money that's seeking to go someplace to make some profit before the central banks start absorbing this excess liquidity. And so I cannot wonder if some of the money is going to these Russian-based metals. Nickel is actually a very good, special example of this because, well, nickel brought down the London Metal Exchange a few weeks ago. The price of nickel for a metric ton was about $22,830 in March 7th. In the beginning of the year, and on March 7th, it went up to $48,200, and on March 9th, during trading, it went up higher than $100,000, and this was because a company called China Sanctions Group they started betting on betting that the nickel prices are going to fall. So they started a short position since last year. And instead of nickel prices going down, the World Bank actually predicted that the nickel price for 2022 will be between $16,000 to $18,000. So this company probably thought that the nickel prices would fall, but instead it keeps on rising. So to cover their short position, to reduce their losses from short betting, they suddenly bought a lot of nickel very quickly in the London metal market, and that shot the market up. And some people are describing it as that deal broke the London Metal Exchange. The London Metal Exchange had to install limits on trading price range. It initially put in 15% price limits, and then it's now been reduced to 8%, but still, the after effects from that very large purchase and that very large change in prices that took place on March 8th, we're still seeing some of that effect now. It's coming down. It's come down somewhat from that very high levels that we saw on March 7th and March 8th, but it's still somewhere around $32,000 per metric ton, which is historically high and about twice as high as what the World Bank predicted the prices will be this year.
And now adding onto all this, Professor, Russia says a major pipeline that carries oil to the Black Sea is going to be out of commission for more than a month because of what it says is storm damage on the NYMEX. West Texas Intermediate was up more than 5% for the day and about the same in London for Brent crude. What do you see happening with oil prices going forward?
Okay, well, what's happened with the oil prices, it's somewhat similar to what's happened in nickel. The big shock over there was a shutdown of the pipeline in Russia. I'm not sure if I can pronounce this correctly. Novorossiysk pipeline. And what that pipeline does is it delivers oil mostly from Kazakhstan. 90% of the oil that travels in the pipeline is from Kazakhstan. And it delivers it to Russian ports so that it can export that oil to Europe and the United States. And it carries about 1 million barrels per day. That's about 1.2% of global supply. But that pipeline has shut down because, the Russians who take care of that pipeline are claiming storm damage. The Americans are a bit suspicious on that. President Biden is scheduled to travel to European Union in the next week or so, and they were going to discuss Russian sanctions. So there is some suspicion that perhaps Russia is putting some pressure on Europe to show that they can raise the oil prices even higher, raise the global inflation, so that they can try to minimize new Russian sanctions. Now, the Russian sanctions cover right now about 2 to 3 million barrels of oil because United States is not buying any oil from Russia. As I said, about 1.2% of global supply travels through this pipeline, and only about 10% of that can be rerouted through other pipelines. So at least in the short run, the Russians are saying perhaps between 6 weeks to 2 months, the pipeline will be shut off. And that would cause at least a short-term rise in oil prices. If you look at the oil futures right now, the futures which are due to deliver in April and May, the prices of that have risen up quite a bit to $115 per barrel. But if we go further out into the future, the price settles down. But still, the supply of oil is right now somewhat restricted. The OPEC is refusing to increase supply despite pressure from the United States. And shale oil, which were expected to cover some of the supply fall, is not being increased all that much because, during 2020 and 2021, a lot of U.S. shale oil producers went out of business, and these producers are now saying they would rather build up their cash supply and give dividends to their stockholders rather than use that money to increase supply.
All right, Professor, got it. We're going to have to leave it there today, up against the clock. Thank you, as always, for sharing your insights with us. We do appreciate it.
Thank you.